This is Chad Staskal, Managing Partner of Eagle Wealth. Today, I'm going to talk about some of the economic headlines that influenced markets in the last month, and I hope to give you some insight into what it could mean to you as an investor. So let's take a look at what's driving markets right now. And I'm going to focus on one key point. The economy is slowing, not stalling. The pace of economic growth appears to have peaked for this business cycle. Economic growth in the second quarter was 6.6%, which is a very high rate. And this quarter's growth rate, the third quarter, is expected to come in at a lower rate. Actually, over the next 12 to 18 months, the rate of growth is likely to return toward the pace the economy experienced in the previous expansion, which lasted about 10 years and averaged 2.3% per year. The second quarter's growth rate was the fastest rate we have seen since 2003. Well, outside of last year's reopening, of course. The growth was heavily driven by solid consumer spending due to the reopening of the economy and several stimulus checks that were sent out to households. However, this is not a sustainable pace, and we all know that. The outlook for the economy has changed rapidly. A month ago, the view for the third quarter of 2021 growth was much stronger than the second quarter's, based on the assumption of the widespread vaccinations would ease the labor shortage, schools and offices would reopen, and business and leisure travel would bounce back. But that is not how it's playing out. America's reaction to the surge in the Delta variant cases has changed businesses and personal spending behaviors. Consumer sentiment fell to the lowest level in almost 10 years. Payroll growth has slowed, and the number of people flying has definitely tapered off. The good news? The pace of growth does not appear to be stopping. It is simply slowing toward a more sustainable pace. This expansion is expected to last for some time due to the robust fundamentals. Household balance sheets are solid. Household net worth is increasing 23% compared to last year. Households have more than $2.5 trillion in excess cash, providing a lot of that dry powder for future purchases. Also, corporate balance sheets are fundamentally solid, resulting from their substantial gains in profitability. This recovery/expansion, like most, will have its ebbs and flows. The ebbs centered on the cycle of COVID-19 cases and the lack of supplies, which is most pronounced with computer chips and the shortage thereof. But underlying all of this is the constant demand for goods and services, which is the key driver of a sustainable economic growth. Markets have remained resilient despite concerns about the Delta variant, weaker than expected economic data, and the Fed policy uncertainties. Continued strength in earnings has helped support a steady rally in the S&P 500 this year, with 54 new closing highs and only 2 4% pullbacks. However, the second quarter is expected to represent the peak in the earnings growth rate this cycle, and historically, that suggests a deceleration in profit expansion and will bring higher volatility and more modest returns ahead. The bond market is also still dealing with historically very low yields. While we do expect interest rates to go up, they're not expected to increase substantially anytime soon, as the Fed plans to keep short-term interest rates low and inflationary pressures are viewed as temporary. So now that you're a little more caught up, what should you do? First off, stay focused on your financial plan. Wise investors take the longer view, understanding while these numbers do affect and reflect the markets, they don't always represent the full picture. By investing in a strategy that takes years to play out, you know that the economic big picture isn't a snapshot, it's an epic film. You also have a team who thinks in terms of the big picture in your corner, happy to talk with you about any questions you might have. Please remember, nothing here we're talking about is a recommendation. If you want to discuss your personal financial situation, don't hesitate to call us at 541-330-0220. We'd be happy to talk to you. Once again, this is Chad Staskal with Eagle Wealth Management signing off for the month of October 2021.